I think documenting from beginning to end all those deals that you've done up until the point to where you're ready to go bigger is incredibly important. I think that's also if you're spending your time around those that are doing bigger things, which you should be, as you're working up towards that goal, you should be spending time going to networking events and spending time around those that are already doing what you want to be doing. I think what you'll find is that you'll probably start to get noticed, and it will make those conversations a lot easier. And also you'll have a better understanding of maybe what value proposition you can bring to the table for some of those groups that are already doing what you're doing.
You found the Real Estate Law Podcast, because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. If you're a real estate professional or looking to build real estate expertise, then welcome to the conversation and discover more at realestatelawpodcast.com.
Welcome to the Real Estate Law Podcast, and I'm really glad that you've chosen to join us for another episode. We have a really special guest today. We're going to be talking to Kevin Bupp, who is a real estate investor out of Florida, and he's got his hands in a lot of different projects, and he's a podcaster himself, and he has an amazing podcast, Real Estate Investing for Cash Flow, which has hundreds of episodes and runs circles around this podcast, one of the ones that we aspire to be as good at someday. And we'll say hi to Kevin in a second. Let's say hi to Rory Gill, our co-host, attorney, broker from nexthome Titletown Real Estate and Urban Village Legal in Boston.
Hi, hey, Jason, how are you? I have my notepad in front of me because I'm expecting to take a lot of good notes here. Kevin, with this kind of hot market that we've been working on, thinking about different ways to invest and find ways to find cash flow, he's really taken a few strategies that are foreign to me. So I'm excited to hear what he's done, the projects that he's working on. And without any more, I'd like to welcome him on.
Welcome, Kevin.
Jason, Rory, excited to be here, guys. Thanks for having me.
Yeah, we're recording this on a very balmy day in Boston. I think the temperature outside is about 12, not including the wind chill. You're wearing your polo shirt because you are enjoying some sunshine in Florida. So let me give you a quick little welcome and explain to everybody who Kevin is and why he's here on the podcast. He actually runs his own podcast, and there's hundreds of episodes. If you have not downloaded Real Estate Investing for Cash Flow, I strongly encourage you to do that. It's a great listen, talks about all different facets of real estate. Lately, there have been a couple episodes about commercial real estate. I know one you just published has the word blockchain in the title. So, we're all talking about NFTs and blockchain and crypto and how that fits into real estate these days. And we don't really have to get into it on this episode because it's going to become an 8-hour fight between me and Rory, but that's for another time. Let's start from the beginning, Kevin. I mean, you've been doing this for a couple decades, and you're a real estate investor yourself. We understand that you've been working a lot in the mobile home space and in parking lots, and we have not had that discussion yet on this podcast, although lots of podcasts have covered it. So we're really curious to hear more about your success and your experience in those categories and a whole bunch of other things as well. But, Kevin, tell us a little bit about, how your career has evolved into where it is today.
Sure. No, absolutely. And, I've been investing now for 21, 22 years. So it kind of ages me a little bit, but I got started 19, buying, just like a lot of folks do, buying single family homes, kind of followed the guidance of a mentor that I had very luckily met at that young age, who was doing the same thing in the small town, Pennsylvania, where I grew up, just buying, C plus class single family residences that need some work. And I would flip them as needed to generate more capital, wholesale them as needed. And then would try to keep, normally one out of every 3 or 4. I'd keep it as, as an actual rental. Now that I was literally just modeling the exact same thing that my mentor had done. I was not reinventing the wheel at all. I figured what was the point? He had done quite well in his life. He was about 25 years older than I. And so I was just literally following in his footsteps. And so, that exact thing for the next couple of years, and accelerated it quite a bit after moving to Florida back in 2002. And a fairly substantial portfolio, literally utilizing that exact method, just literally following in the footsteps of what others had already done and had proven to be successful, and built up a portfolio of single family properties of about 130 of them by my mid 20s, and then started buying multifamily properties and kind of evolving into smaller commercial properties, just trying to get a better understanding of what now I perceive to be is a bigger game, right? Like bigger properties, just really bigger numbers. And ultimately that carried me to 2008. 2008 was a very challenging time down here in Florida. And essentially, long story short, lost pretty much everything. Even my primary residence I was living, it was a very challenging time. Florida was kind of one of the couple of ground zero where markets literally took a complete nosedive, not even down to the level they started at maybe years prior, but even to a negative level. No matter how much equity you have, you seemingly were upside down on most investments. Even rents went down. I know a lot of people say the rents never go down. Well, they did, and they did for a period of a couple of years down here in Florida because we had just a ridiculous amount of excess supply. And so, fast forward a couple of years after the crash, was kind of working to figure out a way to rebuild myself, and that's why I was introduced to mobile home parks. And that was back in about 2010 when I was introduced to it, and bought our first mobile home park at the beginning of 2012. And so, just now a decade ago, and bought that first park, and it went quite well. Bought a second park, that went even better. Bought a third park, and now here we are today. I've transacted, I don't know the exact number, probably over 40 mobile home parks. We own parks today in 13 different states, Northeast, Southeast, and a couple in the Midwest, and I built a business around it. And so really accelerated it about 7 years ago to where we started bringing on outside capital, outside of just friends, family, and our own capital. And aside from mobile home parks, we've expanded recently into parking assets as well, so surface parking lots and parking garages in strategic locations. So it's been quite a ride. It's been a lot of fun. And mobile home parks were kind of a secret 10 years ago when I bought them, when we started buying. Now it seems to be one of the flavors of the year, or I guess maybe decade, we could say. And I think the secret's out. I wish I would have bought more back before everyone found out about it. But either way, it's a great asset class to be in. And, we've always been contrarian investors. And so I always felt that way with mobile home parks. It's kind of mainstream, but parking lots, very contrarian in nature, very niche, and not many folks you hear talking about it, just kind of like 10 years ago, mobile home parks. And so we're hoping that we can, maybe, get a foothold and start buying these assets and consolidating that marketplace before, again, it becomes the flavor of the decade. So anyway, there's a condensed version of my background and my story.
Yeah. Rory, I have so many questions. I have so many places I want to go with this. First, why don't we share with Kevin how important parking is where we live in Boston?
Yeah.
I mean, people keep posting the individual parking spaces for sale in the area. The most recent one I saw in not a prime location was $65,000 for a single parking space. And I'm sure it goes way up from there. And I'm sure, there's cities that are much worse than Boston on there. So, that caught my attention too. I mean, another thing I would just kind of flag, I don't have questions on it, but we've spoken to a lot of people where crash of 2008 really was foundational in their journey and their mindset. And those who are still here talking about it had, suffered real hardship, but made some real strong adjustments for it. So kind of going out from the single family space that you were well mentored in and starting to look elsewhere, I think is a lesson that everybody should be taking, maybe not following the exact type of investments, but having that flexibility and that ability to reimagine their goals during a hard time, I think has been a theme that we've seen with a bunch of our guests here. But with that, you talked about a bunch of different asset classes. How is it, to go against the grain into a less traveled path and to look at parking lot storage units, mobile home parks, things that weren't the traditional single family or small multifamily rental?
So the question was, how was, I guess what sent me down that path? Is that, with mobile home parks. So backing up before the crash, we had started buying multifamily, smaller multifamily properties. And I say smaller, 20 unit, 24 unit, 36 unit. We didn't have anything larger than, I think 72 was our largest. And so we just, leading from single family properties, I realized the economies of scale and the efficiencies that were gained with the multifamily stuff. And although that was kind of entering into a very turbulent time, 2007 leading in 2008, I knew that when it came time to rebuild, back prior to the crash, I was single. I mean, I didn't have kids or anything like that. In 2008, I met, who is now my wife. We have, 2 wonderful children together. And so I knew that, prior to that, I had all the time in the world to build this little, single family home portfolio, which took a lot of time to acquire that many single family properties that I felt were, worth keeping. And I wanted to do it in a more efficient manner this time around. Again, I met my now wife, and we knew that we were going to have a family together. And I figured there was probably a better way to skin the cat. And so looking back, I knew that it was going to be multifamily when it came time to rebuild. And, I just, by happenstance, literally a lunch conversation with a gentleman by the name of Randy back in 2010 is what sent me down the path of mobile home parks. I had never considered it as an asset class. I was introduced to Randy by just a mutual friend of ours, basically saying like, hey, Randy's a cool guy. He's been a banker for 30 years. He owns some mobile home and RV parks. But bottom line, he's a nice guy. You should go have lunch with him, right? Just talk business, talk shop, whatever. He's just a great guy. And I did. And after that 2-hour lunch with Randy, where he basically threw in my face all the beautiful aspects of mobile home parks and why we should consider that asset class and not multifamily, I walked away from that lunch meeting with Randy, basically committing myself to saying, hey, I'm going to buy a mobile home park over the next 12 months. And so everyone needs a roof over their head. A lot of this country needs an affordable roof over their head. Mobile home parks very well fit that niche. And again, back then, unlike today, it was kind of an under the radar asset class. Like those that were in the know didn't really talk about it that much. They kind of kept the secret to themselves. Now I understand why. And so, there was a lot less competition going after these mobile home park assets than there were in the multifamily space. So that's what we did. That's what sent me down that path. And again, I had a lot of trepidation. I didn't know what I didn't know. There was many deals that I backed out of that first year that now I kick myself in the butt. Wish I would have closed because I kind of followed them along their journey. But we did buy when we pulled the trigger. It took me about 14 months to pull the trigger on a heavily distressed, foreclosed mobile home park in Atlanta, Georgia, which we literally just sold last year. So I held it for quite some time, and it was practically all vacant. I mean, it was a disaster, but we got it at a really good price. And I have done some big projects in the past. So that didn't scare me away. It just, the unknown scared me more than anything else. But we got into it, stabilized it in about a year, and ultimately, quadrupled our money, got our money back within the first couple of years, refinanced it many times. I mean, we made a lot of money on it. It was a great asset. But after that first year, once we got stabilized, I was like, there's something to this. I mean, for how much, the amount of capital invested into this to what our returns were. Our returns were just, 30, 40, like 35+% after we got it stabilized, annual returns. And I wanted to see if we could replicate that. And we did for many, many years, continued buying and buying and buying. And it just became an asset class we knew really well. We were comfortable with it. And again, felt like we were going against the grain and we were buying assets that other people were kind of snubbing their nose at or weren't even considering to be a good investment. And so that was really the introduction, and I'm glad I stuck with it, and I'm glad I had that lunch meeting with Randy because I would have continued buying apartments, which are great as well. I've got a lot of my own capital invested with a number of sponsors in the multifamily space. Love it. I love multifamily, but mobile home parks were the asset class that worked well for us.
Yeah. I think it's a lot of lessons there to, the blocking and tackling analogy that I've used before, but, defense wins football games, right? If you know the basics, then you're a little further along because you can focus in on what you want to do. Early on in your career, you said that, you had a mentor who was 20 or 25 years your senior, and you basically said, well, let me just do what he's doing. It seems to work. Yep. And then leading up to the crash, it worked for you, right? And you might be in a similar situation with mobile home parks now where you had that meeting with Randy. And I'm curious how to trust people like in this space, because I think that in real estate, a lot of people want to help each other, but when it comes to asking for money and that kind of thing, sometimes your guard goes up and you say, well, geez, do I give this guy money? Do I give this guy my time? Is this somebody that's going to screw me or not? And it sounds like you've had some success with finding some mentors that have led you down a pathway, but maybe comment on that a little bit.
Yeah. So Randy, I wouldn't say he became my mentor. I mean, we stayed in contact and we never did a deal together, but the underlying fundamentals I understood. I understood that everyone is I understood, finding, the right market, right? The right market's the most important, the right location, right market. It's got to be in a market that has a demand for that particular product. So I understood how to make that determination already. I was comfortable with that. I didn't, as it was related to mobile homes per se, but again, everyone needs a roof over their head, especially an affordable roof over their head. So I got comfortable with the market that park was in. I've got comfortable with knowing the, massive renovation side of it that was going to be necessary. The big unknown factor was just the mobile home in comparison to an apartment, right? Like it's a different type of living structure. That was the unknown part of it. And so the partner that I brought in on that very first deal was a close friend of mine that I had done many other real estate transactions with. I had gotten to know him, he and his brother, when I moved down to Florida. They were a huge investor. They had hundreds and hundreds of single family properties, lots of multifamily stuff. And so again, he was more of a friend than a mentor, although we had done deals together. But he had actually bought about a year prior He lost everything in the crash too. And then a year, 2 years went by, and he went and bought a couple mobile home parks. And again, we never even talked about this. He just went and bought a couple mobile home parks. And so he had taken a couple, beatings and bruises buying it and trying to understand it and learning that asset class. And so he'd already gone through some of the challenge that I probably would have ultimately faced if I'd have gone at it alone, some of the unknowns. And so I actually brought him into that deal. Him and I partnered together. I trusted him already. We had already done some other transactions together. We both put money into the deal, and we literally, JV'd. I mean, he was as involved as I was. And so that's really where my guidance came on that very first deal. And I was able to quickly eliminate some of those unknowns that caused trepidation. And moving forward, we bought a number of other properties together before I kind of went my own direction and formed what now is Sunrise Capital Investors, and brought other partners in and started raising capital from outside folks and building a team underneath me. And so, but again, I guess you could say he was a mentor, because although we were partners, he was the guiding light. I think that's important to anything. I mean, there's no need to reinvent the wheel. There are many other people out there that have already done what you want to do and have done it successfully. You got to find those individuals, weed out the bad apples and find the ones that are trustworthy. And I think trustworthy comes from gut. A big part of it's gut. I think your gut tells you a lot of everything you need to know when it comes to meeting somebody. If your gut's, doesn't feel right, it's probably right. You should probably maybe reconsider that individual as being a mentor. But I think just, speaking to like going to an investment club meeting, the 10% of that room that's there are the ones that are actually probably doing something. Talk to folks, find out who of that 10% are the ones that have a good reputation, have a good track record. People speak very, very nicely about those folks and very positive manner. And those are the ones that you want to spend your time with. And those are the ones that you want to ultimately, follow their path and potentially maybe even have them become your mentor if at all possible.
Another call for networking. It's important.
It's huge.
Going to these groups. Yeah, it's huge.
Absolutely. I think the important things with those groups, though, I haven't been to one of those investment club meetings for many, many years, but I remember when I started going, when I moved down to Florida, there was 3 of them within a 30-mile radius, a couple different nights of the week. And very quickly, I realized that I kept seeing the same faces there, the same faces of the people that would seemingly never take any action. And it ended up being 90% of the group. Like, you realize that these folks are just coming here. I don't know if they're coming for the free coffee or the crappy donuts or what, but they're here, but they're not doing anything. There's really only a small select group of people in those meetings that are actually taking action, that are doing deals that are worthy of I think your time, right? We only have so much time in a day, and you want to spend your time around that 10%, not the other 90% there that's there to network and talk and, just for something social to do.
Yeah. I think it's a combination of people trying to find a niche and find a space and, getting excited in a new endeavor. If they say, hey, I think I want to get into this, it's, there is a lot of courage that goes into showing up at one of those meetings for the first or second time. And then you start to see some friendly faces there. But yeah, to your point, if no one's really doing anything, it's just the same people that are socializing in a different manner amid the people that are actually taking action. We've gone to a bunch of them. Rory and I have. Lately, we haven't with COVID. We ran one a little bit last year. We had a couple meetups, and then the city kind of shut down again. So we put that on ice for a little bit. Things are different in Massachusetts versus Florida and other places in the country.
Right.
So we still have a lot of restrictions up here. But it's super important. I mean, like, networking online, it doesn't really quite take the place of networking in person, in my opinion. It's not a suitable substitute, but it's not terrible. It's something, right? While we're all kind of working through COVID, but in-person meetings are great when you find those right people. The sniff test is important. Like, if it smells like it's sour, then run the other way.
I agree.
I wanted to ask you, you've obviously outgrown just using your own capital. You have Sunrise Capital Investors. When you start taking on outside capital and outside investors, how does that change your mindset and just the way you go about doing your business?
That's a great question. I think and I'll answer it by saying this, that it's a huge responsibility. And I think it's incredibly important. It doesn't mean that it's the only way, but I do think that it's incredibly important for someone. Let's say that you're going to start buying multifamily properties. Let's just use that asset class. I think it's incredibly important for an individual that wants to scale. Everyone throws that word around. I want to scale. I want to whatever, buy 1,000 units, 2,000 units. I think it's important to actually risk your own money first before you take the responsibility on of risking outside capital, right? And whether that means you go buy your first, it's just a duplex or a 4-unit property, I think you need to prove that concept. It's all theory until you actually go out there and do it. And I don't think anything says like, I'm willing to put all this on the line unless it's your own money that you're putting on the line, right? And so I think that alone, I think gets you in a much more comfortable state that you'll do everything within your power to protect and treat that other capital, outside capital, as if it's your own, because you're technically, you've already risked your own capital, and you're probably risking your own capital in these next couple of deals that you're going to maybe bring outside capital in for. And so I was already like, I was already in that mindset because I'd use my own money, and then we started bringing in some friends and family money, right? Which I think that's probably the most uncomfortable of it all, is the friends and family money. And if you can get comfortable knowing that, like, you trust yourself enough, and like, you've proven the concept, like, your craft so well, and you're confident that you can bring in friends and family money, then I think you're already there. At least me personally, that's kind of how I felt. Like I knew that we were really good at what we were doing, and that if anything, I was giving value to those that were looking to place their capital with us. Like, it was a win-win. It wasn't just me asking for something. It was us sharing a value with each other. They were sharing their capital with me, but then in return for that, I was going to share a wonderful opportunity with them. And so that's kind of how I looked at it. And again, that's why, backing up, I think it's very important to prove your concept first. And even if it's on a small scale, I want to buy a big multifamily property, start with a duplex, document it, use it as a case study. And again, make sure that your own capital is at risk. I think that's the only way. That's my personal opinion, but I think that's really the only way to get comfortable.
Yeah, that way those Thanksgivings are not that awkward. When you've lost everyone's money in the room, you won't get invited in the future. Even when you're doing well with fam, I mean, like, seriously, even when things are going great, I still think it's me personally. I've always felt uncomfortable, and we've only ever, all the friends and family money we've ever taken in, like, it's done really well, right? I mean, like, we've exceeded expectations, but even then, it just, for me, maybe that's just my awkwardness, I don't know, but it creates just a weird dynamic. It's no longer just friends and family. Mm-hmm. It's the money that they've worked incredibly hard for that could have a detrimental impact on their lives should something happen with the investment that you've taken that money in for, right? That's just, there's a lot of responsibility on your shoulders there. Let me ask a question, though, the next stage after that. If you can think back to some of your early deals, because I think a lot of people who are listening to this podcast, and probably yours and other podcasts that are out there, maybe they've done a couple deals. They've done a couple rentals, they've done their own primary home, maybe they have a multi, maybe they have other asset classes, and they want to start scaling. They want to do either, a mobile home park, a parking lot, more multifamilies. They kind of have gone past their money. Maybe they've done some friends and family money. What's the next step? Like, what advice would you give for somebody that is saying, all right, I've done 2 multis and now I want to take a big swing. Where do they find the money?
Yeah, and I think that's the importance of documenting your process along the way, documenting the deals that you have done, talking about them, getting active in the real estate clubs, the meetings, other folks that are doing what you're doing, social media, right? Social media is just huge. I mean, like that, if you're not speaking about what you're doing in social media and you're trying to build a reputation for yourself, and you're not out there sharing with the world of all the wins that you're having, then you're shooting yourself in the foot. And so again, I think documenting from beginning to end, all those deals that you've done up until the point to where you're ready to go bigger is incredibly important. I think that's also, if you're spending your time around those that are doing bigger things, which you should be, as you're working up towards that goal, you should be spending time going to networking events and spending time around those that are already doing what you want to be doing. I think what you'll find is that you'll probably start to get noticed, and it will make those conversations a lot easier. And also you'll have a better understanding of maybe what value proposition you can bring to the table for some of those groups that are already doing what you're doing, right? Like this, I always like to say, like, multifamily and bigger deals in general, it's a team effort for the most part. Very rarely do you ever see a 300 unit apartment complex, a $30 or $40 million transaction that's done by just one individual, literally one, sole member of the LLC. I know it exists, but like that's not the common theme. The same goes with larger mobile home park transactions or larger parking transactions. It's typically a team sport that makes this happen. And so what I have found, there's a number of folks that we have that are partners with us on some of our larger mobile home transactions. For example, we just did a deal a couple months ago. Someone actually brought us a deal. He had already done, 7 or 8 small mobile home parks, smaller meaning like $1 million or less. And he was out there pounding the pavement. He ran across an opportunity for a 2-park portfolio. It was a $13.5 million deal. He had strived to get to that point, but he wasn't there. He didn't have the capital source to do it. He might have had the experience to be able to take it down, but he just didn't have access to capital to make it happen. And nor did he have the management infrastructure to actually operate it once he had taken it down. And so he came to us, and ultimately, not only did we give him a big finder's fee, but we actually made him a partner in the GP side of the deal. So now he's in that deal. We're working on the operation side with him. There's some improvements that we're going to be making, but we're kind of teaming up with him and his smaller company to actually work this deal together. He's learning a ton. He's kind of seeing how maybe a slightly larger group, is doing things, and maybe how he might be able to evolve his business to do these larger deals by himself in the future. And so I think that's a great example of like what you can be doing if you've already done a couple of deals and you want to start, getting bigger and doing some scale.
Kevin, when you take over a mobile home park, what do you do that first month? Like, tell us about like day 1, day 7, day 14, day 30.
Yeah, no, it's a great question. Obviously, every property is different than the next, but we have a specific branding that we use throughout all of our parks. So you go to any one of our parks, the signage is the same. The name of the community might be different, but the signage is the same. The entrance looks the same. Even the landscaping at the entrance, assuming that it's a similar climate, like it follows all the same theme. And so, within that very first month of ownership, I mean, we're looking to execute on the improvement plan. And again, it includes signage, aesthetics. If the roads need repairs, we go in and repave the roads. If there's tree work that's needed, we go in and, take trees out, trim trees up. If there's general cleanup that's needed, we do that, and we improve the offices. It's more cosmetic over that first month than anything else. And I'd say thereafter that, the second step of that plan, because that first step, not only does it improve the looks of the property, but it also builds a lot of trust with the residents. Because most of the things that we're taking over, not that they maybe have been mismanaged, but most of them have some type of deferred maintenance. They haven't been run as efficiently as maybe what they should be run. And so our objective is to go in and build trust with the residents, just not this new owner coming in going to do the same, do it the way that the old people did it for the last couple of decades. And so that built a huge amount of trust that first month. They see a lot of positive things occurring. We put in playgrounds. If there's not a playground, there's a lot of kids in the community. And then thereafter that, we just look forward to, we look to executing the rest of the business plan. And that might mean bringing units into any of the vacant lots that are there. If there's any vacant homes that we acquire during the acquisition, we renovate those homes and sell them off to, to new homeowners that we want to bring into the community. That's it. I mean, we find efficiencies. If the management side of things, we have on-site managers, each one of the communities, if we found that was one of the challenges, we might bring in a new management team there on site to help us execute on those goals. But that's really, I mean, that's kind of like the first 3 months, I would say. And then thereafter, it's I don't want to say this, but it's not really all that much rocket science. It's really implementing the business plan, enforcing the rules, ensuring that, rents are received between the 1st and the 5th of every month. If not, we have a protocol in place to hand out late notices and eviction notices and things of that nature. But it's really creating pride of ownership in the community. And, and that also means sometimes putting events in place, like we do socials in the summertime, we do cookouts and things of that nature. We give out prizes for nicest yard or, nicest flower bed, and, do just different things like that to really engage the entire community, bring everyone together.
I want to ask you more about, to comment more on the kind of the broader impact you have in the community and what regulatory hurdles you face, because I know across the country, we have a desperate need for affordable housing. Mm-hmm. And I think that's part of why the secret's out on mobile home parks and why they turn into such a great investment, because there's such a demand for affordable housing there. So, how do you see your mission fitting in with the need for affordable housing? How do you relate to the communities? And do you face any resistance from local exclusive zoning rules or anything like that?
Yeah, no, it's a great couple of questions there. And I'll try to break it down a little bit. So the first thing is like, how do we fit into the affordable housing space? And the best way to put it is that, number one, mobile homes, especially new mobile homes that are rolling off the assembly line today, they literally utilize the same type of construction materials as that of an apartment building or even a single family home. I mean, they have 2x4 studs in the walls. They use laminate flooring or plank flooring, drywall in the interior, recessed LED lighting. I mean, they're, again, the same fits and finishes that you might find in a single family or an apartment complex. And so you could pick any market that we own a mobile home park in today. It doesn't matter, northeast, southeast, doesn't make a difference. And I can guarantee you, in our mobile home park, if someone's looking for let's call it a 3-bedroom, 2-bath, let's just pick that size of a unit. Our mobile home, a 3-bedroom, 2-bath mobile home, is going to be substantially less, most of the time 20 to 25% less than a comparable 3-bedroom, 2-bath apartment, and probably 40% less than that of a comparable 3-bedroom, 2-bath single family stick-built home. But I'm talking the same school district, same part of town, same quality of residence, same fits, finishes, what have you, but it's going to be substantially less. And so I think that's a huge piece of the puzzle right there as far as filling the need for quality, affordable housing. In addition to that, most of the time we put together creative plans, most of our communities, to where those that want to become a homeowner, if they don't just want to be a renter, we give them the ability to find that path to home ownership to where they can actually own that unit outright without having to come up with 20% down or 25% down, even if they've got substandard credit. And so it gives those folks that don't want to continue renting their entire life and throwing their money away, it gives them the ability to actually become a homeowner and live in a home that's theirs. They can hang out Christmas lights and put their own decorations up and have their own yard and things of that nature. So it's a beautiful thing. It's a beneficial piece of the affordable housing landscape on the rental side as well as on the home ownership side. So as far as like the regulatory hurdles, every municipality is a little different than the next. I will say that mobile home parks, unfortunately, due to a number of bad actors years past, they somehow got a negative stigma attached to them. And, it's unfortunate because you can go to any town, let's pick Boston, right? Like speaking to single family neighborhoods, there's the really bad single family neighborhoods that are just like on the wrong side of the tracks, have a lot of drugs, sex, and rock and roll going, right? Like just bad things going on. And there's the other end of the spectrum. There's incredibly high-end, affluent communities. And you've got the good, hardworking blue class right in the middle, right? That exists in single family homes, that exists in apartments. Same thing happens in mobile home parks. There's the really rough ones that are just trailer parks that are run, they're in a bad part of town, bad school district, just got the bad element. There's super high, nice ones, retirement communities that have really expensive homes. And then there's everything that's in the middle that's really feeding that, the blue collar segment of the world. But unfortunately, all mobile home parks somehow get lumped into the bad category, the bad bucket. Mm-hmm. And so when going into we buy a new acquisition, a lot of times, if it's been somewhat mismanaged, the taste in the mouth of the local municipality is normally not all that great. If it's been really mismanaged, there's a lot of initial friction. But normally what we do, if we have the ability to, we always try to get together a city council before we close on a property. And we actually sit down with, whether it's just the city manager or it's the entire council, whoever we can get that is willing to be open-minded to what our plans are coming in. And we sit down and we actually share with them our business model, who we are, what we've done historically, and what we intend to do with this particular community. But then we actually do it, right? Even if they're not happy about it, we actually execute on our plan. And what we have found, for the most part, is that the attitude changes significantly over the first year after we go in and execute that business plan. We keep the bad elements out. We're not a drain on the resources. We don't have the police being called there, twice a week. And kids running around breaking windows and things of that nature, vandalizing the neighborhood. So normally, within that first year, we've become friends with the local municipality, and it's not an adversarial relationship like it may have been historically. In fact, I've got it's a good story on the very first park we ever bought, that park in Atlanta that I told you about. It was bad. I mean, it was an REO. And so this is back in the days when there was lots of REOs out there still. This thing it had 33 units in it. And it had sat vacant for about a year. And so it had some squatters in it. I mean, it only had a couple units occupied, but they were occupied by people that weren't paying the rent, drug dealers, what have you, just bad elements. And so this park was known, to all the local construction guys of a place they can go dump their, excess construction materials. I mean, it was a drain on the resources of the police department, of the city. It happened to only be about an eighth of a mile down the road from the courthouse. That's also where the chief of police, that's where the police station was. And that's where the local mayor's office was as well. It's a small little town of suburb of Atlanta. And so they had to drive past us every day. The mayor had to drive past us every day for years and years, and he was fed up. He was over it. And so we had our plan in place. We had scheduled a meeting with the mayor and his council, and there was about 8 people in this meeting, chief of police, the mayor, and all their staff. And we thought we're like riding high on our horse. We were going to clean this place up. We presented our plan to them, after 15 minutes of us talking about all these great things we were going to do. The mayor looked at us and he was like, and he's this guy, let me paint a picture for you. He was about 6'4", a little overweight, bald, handlebar mustache. He had a stuffed fox on his wall, a rifle. I mean, it's kind of like a little bit of a rednecky suburb of Atlanta. And so he was fairly intimidating. And he looked at us, he said, "You guys are wasting your money. You should get out of my town. I've been trying to shut that trailer park down for years now, and I'm not going to stop until I accomplish my goal. And so we're not going to work with you. We're not going to make it easy. Take your money, go spend it somewhere else." And
Wow.
My partner and I walked out of that meeting like, well, that did not go how we expected it to go at all. And we looked at it, should we still do the deal? And it was such a good deal. And we felt so confident about it. We're like, you know what? Let's just go ahead. Let's do it. Let's do what we say we're going to do, what we just told them we're going to do. And let's see if their attitude changes over time. So the first thing we did was establish a really good relationship with the code enforcement lady. And we basically gave our cell phone number, say, if you see any illegal dumping, anything like that, you call us right away and we'll get it taken care of. And we basically executed on our plan within a year. I got a call from the Mayor Bobby Cartwright, and I didn't have the number programmed. And he called me personally, and he basically, it was an apology. It was an apology about, he felt really bad about giving us such a hard time. He was very proud of what we had done. And in fact, he called to tell me that one of his employees actually lives in the community now. I didn't realize that, but they lived in the community. And he actually wrote me a recommendation letter, that we use now when we go in to different municipalities, that we share that recommendation letter with them and basically let them know that, hey, like, this individual didn't believe in us. We proved them wrong, and we intend to do the same thing with you. And so it was a beautiful thing. It was a win-win for the community. It was a win-win for the residents. And, it's still a beautiful place today.
Yeah. It says a lot about relationship building and reputation and how important those are. They follow everyone around, whether it's good or bad. There's a lot of fear of the unknown, whether it's people living in the community, and just by you going in there in that first month and doing a lot of cosmetic repairs and deferred maintenance and just taking care of those things, I think it goes super far with building that trust. As you've mentioned, you have your formula, your recipe down. The landscaping is the same everywhere. That is exactly what you should be doing because it makes it easy. You don't have to make that decision, right? But building the relationship with the town manager, municipal folks, that's a great takeaway from this. I mean, you have to get people on your side, and then you have to prove people wrong if they doubt you, and you have to do what you say, which is, it sounds like that's kind of the values that you guys use going forward with all your other deals.
I say one other key element. I think this is important for folks that are, if you end up buying a property that's a distressed and maybe has some of the wrong element in it, and you're trying to get on the right side of the municipality. One thing we did in this community is we renovated one of the very front units that was alongside the road that was leading to the mayor's office and the courts and the police department. And we donated it temporarily, but we renovated it, put the AC and the heat on, stocked the fridge with waters and Gatorades, and we donated it as a substation to the police department for the next 18 months. We knew we had plenty of other units that we had to fill up. And so we donated it to them as a measure of good faith that allowed their officers a place to go, in the middle of the night to, we put some furniture in there to, to write a report, get out of the cold, get out of the heat, whatever it might be. And that was huge as well. I mean, it was the old olive branch, and that paid dividends.
Mm-hmm. Wow. Amazing advice, Kevin. There's so much more we could talk about this. We didn't even get into parking lots, but let's save that for another episode, just because I want to get to the final wrap up, and then you could tell everybody where they could find you. We'll link everything up in the show notes, obviously. So, Kevin, we ask these questions of everyone who comes in the podcast. We get a whole variety of answers. We'd love to hear what you have to say. Our first question during the final wrap up is, if you can get on stage with no preparation and talk for 30 minutes about any subject in the world, not mobile home parks and investments, what do you think that would be?
You said not mobile home parks and investments?
No, like mine, for example, is professional wrestling. It has nothing to do with this.
No, fantastic. So I'm a huge cyclist, and health and fitness more than anything else. It was a critical part of me working through 2008, 2009, 2010. Those were really, really challenging years, and there was only one thing I could really control at that point in time, and that was how I felt. And so I really, really grabbed onto health and fitness and just eating super healthy and getting a workout in every day, looking to break a sweat each and every day. Matthew McConaughey said that years back, and that always stuck in my head. And so I think just the importance of being mentally fit, being physically fit, and making health and fitness literally a part of your everyday life.
Great advice. I wish I had more time. I go through bouts of it. There's sometimes I'm really on the ball with health.
I think we all do, right? Like even those that the most dedicated, we all do. So especially the holidays are the most challenging, I would say, of all of them.
You look at, I see the picture of your family in over your left shoulder. You have 2 young children. I'm guessing they're below 6 or 7 or so.
I think that's a year too old. But yeah, they're 5 and 8 now. But
5 and 8 now. Okay.
Yep.
We have Rory and I actually have a 3-year-old, like almost 3. She'll be 3 in a couple months. So it's a challenge, right? To kind of parent and build business and do things like this, but we look at people like yourself and say, well, geez, look at the empire he's built, and he has these young kids and he finds a way to bike too. Aspire. You
just got to wake up earlier than the rest of the family. I'm not a 4 a.m. guy, but when I go on bike rides during the week, I wake up at 4 a.m. and go, and I dislike every morning that I wake up that early, but I feel really good after I get it done.
I can get you at 5. I don't know if I can do 4.
Oh, yeah, it's rough. I haven't got used to it after doing it for like 10 years.
So second question, tell us something that happened early in your life or career that impacts the way that you work today.
That's a great question. I think just knowing that there's, whatever you want to accomplish in life, there's many others out there that have already been there and done that can help you avoid a ton of mistakes. And so, whatever you need to do, find that mentor or mentors, whatever that means to you and what it is you have as an ultimate goal or goals. And so that's it. Meeting David was the very first guy I met back when I was 19. That was absolutely critical. And when I say that I don't know what I would be doing today, if I probably wouldn't be in real estate. I wasn't even overly interested in real estate when I met him. We didn't go deep into that story there, but David not only played a critical role of turning me down this path, but actually sending me down a successful path. If I'd have tried to work my way through it, making my own mistakes, for all I know, I would have gotten discouraged and actually quit. And so find that mentor or mentors, find those that are actually doing and have already successfully done what you want to do, and spend a lot of time around them and figure out how to add value to them, right? I think that's probably the most important of actually finding the right one, but figure out how do you add value to them in their lives? Because they've already done it. They've been there and they've done it. Figure out how you can add value to them. Great soundbite.
Number 3, and our final question for you is, what are you listening to or reading or watching these days?
And I can't think of the author, but Who Not How. I just wrapped it up. It's a fairly short read, and I can't think of who the author is, but Who Not How. And it just, being an entrepreneur, it's incredibly important to play to your strengths and delegate your weaknesses. And I think we all, no matter how focused we think we are on what our strengths are, we still find ourselves doing some things that probably are not the best use of our time. And Who Not How really speaks to that. It just really, makes you think about, don't think of how do we do this or how do we accomplish this goal? It's like, who can help us accomplish the goal? There might be someone better than you that you need to find that has the expertise, that's been there and done that. Find that individual and implement them into your organization. So it's an incredibly powerful book. Again, really short read. And I don't remember the author, but I'm sure your listeners can look it up and very quickly find it. It's on Amazon.
I'm sure it's a very quick Google search. Who Not How. How many letters?
That's it. Who Not How.
10 letters. Kevin, this has been a fantastic conversation. I really appreciate your sharing all of your experience and insight with the listeners of the Real Estate Law podcast. So let's talk about how people can find you. And first, I do want to encourage everybody right now to go find your podcast on iTunes or Pandora or iHeart or whatever you get your podcast, because those are the same places that we syndicate to. But Real Estate Investing for Cash Flow. If you're watching this, you could see it over his head right now. But if you're not watching this, Real Estate Investing for Cash Flow, you publish episodes, every week? Twice a week?
Yeah, we actually do a couple times a week. There's one main episode, and then we've got some other, recaps. So we do 3 episodes a week right now. And I also have another podcast. It's a mobile home park investing podcast. And I posted for about 4 years straight. All of it's still very relevant. Most of it was very operationally driven content about how we run our business. And so I think we've got maybe 130 episodes, but I do not post regularly on that podcast. However, it's still very relevant and has lots of great information for anyone that thinks they might have an interest in going down the road of mobile home park investing. So both those can be found again on iTunes or Stitcher or SoundCloud, all those other different areas that we all syndicate to. But the best place to find me, really, there's 2 areas. But my main website, kevinbupp.com, that's actually where I host the Real Estate Investing for Cash Flow podcast, so they can listen to episodes there. Again, find it on one of the other apps that we had mentioned. And then our company, if you want to see a little bit more of what we've got going on in the mobile home park or parking lot investing space, it's sunrisecapitalinvestors.com. So either one of those, you can learn about me and our company and what we've got working.
And your Instagram I loved it. Like little sound clips, of you driving around in the car, right? What's the Instagram handle? Do you remember?
Oh my gosh. And you asked me that. I don't even know my Instagram handle. I think it's
okay.
Kevin Bupp, I believe.
All right. So, somehow I found it very easily by putting your name in there.
Yeah. I think it's Kevin Bupp.
One total aside, I was thinking about this. I was dropping our daughter off at daycare, and I didn't have my phone on me today. And you feel so naked without your phone. And I was thinking, like, God, one of the coldest days of the year. If I break down between here and there, what's going to happen? I have this kid in the car now. Like, I could just call Rory. And I'm like, who else could I call? Like, I don't know anybody else's phone number. Like that's about, nobody knows their Instagram handles. Nobody knows their phone
crazy.
number. Yeah. It's in your phone. You just go find it.
I know my wife's phone number, and that's it. That's literally the only phone number I've known. And my parents' home phone line, which they still have, which is crazy.
From growing up, right? I still know that phone number.
Yep. Yeah. They have the same phone number. They've had it for 40 years.
Yeah. Thanks again, Kevin. Rory, quickly tell everybody where we can find you.
You can find me at Nexthome Titletown, nexthometitletown.com, or Urban Village Legal, urbanvillagelegal.com.
Cool. So thank you for listening to the Real Estate Law Podcast. If you've enjoyed this episode, I encourage you to subscribe and to like and to comment. And I'm sure Kevin would say the same thing for his podcast. So go download that. Go give us some love. And thanks again for tuning in. See ya.
Thank you.
This has been the Real Estate Law Podcast. Because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. We're powered by Nexthome Titletown, Greater Boston's progressive real estate brokerage. More at nexthometitletown.com. And Urban Village Legal, Massachusetts Real Estate Counsel, serving savvy property owners, lenders, and investors. More at urbanvillagelegal.com. Today's conversation was not legal advice, but we hope you found it entertaining and informative. Discover more at realestatelawpodcast.com. Thank you for listening.